Kaspa just experienced one of the most brutal flash crashes in its history. We're talking about a coin that dropped from 8 cents all the way down to under 1 cent in literal minutes. $15 million in long positions. Gone. Liquidated. Erased from existence. But here's what nobody's talking about. While retail traders were panic selling and getting wrecked, one whale quietly added 9 million KAS to their stack. So what do they know that we don't? And more importantly, is Kaspa about to bounce back hard? Or is this just the beginning of something worse? Stick around, because what I'm about to show you on the charts is absolutely wild. What's up, crypto fam? Welcome back to the channel. If you're new here, I break down the market without the hype, just pure analysis and a bit of chaos on the side. Do me a favor, smash that like button right now and subscribe if you want to stay ahead of these market moves. Trust me, you don't want to miss what's coming. Alright, let's dive in. So here's the context. This past week has been an absolute bloodbath across the entire crypto market. We witnessed one of the biggest single-day sell-offs of the year with over $19 billion in value, just evaporating into thin air. And what triggered this carnage? President Trump dropped the hammer with a declaration to impose 100% tariffs on Chinese technology imports. Yeah, you heard that right, 100%. Global markets freaked out instantly. Risk assets got hammered as investors scrambled to exit positions, and crypto, being the volatile beast that it is, took it on the chin harder than most. Bitcoin tanked, Ethereum followed, and basically every altcoin in existence joined the party on the way down. Kaspa was no exception. In fact, KAS experienced one of its largest losses in months, and the carnage was spectacular in the worst way possible. Now, before we get into the technical damage, let me give you some interesting context. So fundamentally, Kaspa's ecosystem is actually growing and maturing, but as we're about to see, fundamentals mean absolutely nothing when macro shockwaves hit the market like a freight train. Here's where things get spicy. According to recent data, nearly $15 million in Kaspa long positions were liquidated in just 24 hours. This wasn't just a Kaspa problem though, this was part of a broader crypto wipeout that actually surpassed even the COVID crash in total market liquidations. Let that number marinate for a second. More liquidations than the global pandemic panic. That's genuinely insane. But while everyone was losing their minds and watching their portfolios turn red, something peculiar was happening behind the scenes. A major Kaspa holder, specifically Wallet 10 by Total Holdings, decided this was the perfect time to go shopping. This whale added nearly 9 million KAS to their position, bringing their total holdings to approximately 231 million KAS. Think about that. While retail is capitulating and running for the exits, smart money is accumulating aggressively. The price action was absolutely savage. KAS briefly fell under 1 cent, before staging a remarkably quick recovery back to the 5.6 to 5.8 cent range. The question everyone's asking now is simple: was that the bottom, or are we about to see round 2 of the pain? On the 4-hour time frame, the story becomes crystal clear. Kaspa had been trading relatively peacefully between 7.8 and 8 cents for weeks, building what looked like a solid base. Then, without warning, the entire market unraveled. We got one massive red candle that pushed the price down to just under 1 cent in a matter of minutes. That kind of vertical destruction usually signals one thing: a liquidation cascade. Traders using high leverage got absolutely demolished. Stop losses were triggered in sequence. Liquidity evaporated. It was a textbook example of what happens when overleveraged positions meet sudden volatility. The longs got sent to the shadow realm faster than you can say risk management. But here's the fascinating part that seasoned traders are paying attention to. The recovery was almost as violent as the crash. Within hours, KAS clawed its way back above 5 cents. That kind of aggressive buying doesn't happen by accident. It means big players or market makers stepped in to stabilize the price and scoop up cheap coins from panicked sellers. Classic whale behavior. As of right now, the price is hovering just below 5.7 cents. The old support zone around 7.5 cents has now flipped into resistance, which is a textbook bearish structure. Let's break down the market indicators because they're painting a pretty clear picture right now. The RSI is hovering between 33 and 37, which puts Kaspa firmly in oversold territory. Historically, when RSI drops this low, we often see a relief bounce. But here's my take. Oversold can always get more oversold, especially when macro fear is driving the selling. Don't mistake a technical indicator for a guarantee. Open interest has been absolutely crushed. We've seen it drop from around $708 million down to $379 million. That's nearly half the leveraged positions getting flushed out during the crash. Long positions have been cut back heavily, while short positions remain elevated. What does this tell us? Traders are staying cautious and leaning bearish for the immediate future. Nobody wants to catch a falling knife, and the shorts are still in control of sentiment. The MACD is confirming this bearish bias. It's still printing red bars, and both signal lines are pointing downward. Selling pressure hasn't completely faded yet. This isn't a market that's ready to rip faces off to the upside. This is a market that's still nursing its wounds, still processing the trauma of what just happened. Recovery takes time, and forced bounces rarely lead to sustainable trends. In my expert opinion, we're in a consolidation phase where the market is trying to find equilibrium after the shock. The quick bounce from 1 cent shows there's strong demand at lower levels, but the failure to reclaim 7.5 cents shows that bulls aren't confident enough to push aggressively yet. We're stuck in this limbo, and whoever blinks first, bulls or bears, will likely determine the next major move. So what's the game plan for this week? Here's how I'm looking at it. The 5.5 cent level is your line in the sand. If Kaspa can hold above that zone, there's reasonable room for a small rebound towards 6.5 cents or even 7 cents. But let's be clear, that would be more of a technical recovery than a genuine trend reversal. It's the market catching its breath, not the start of a new bull run. However, if KAS slips back under 5.5 cents, things could get ugly fast. The next major support sits closer to 4.5 cents, and if we break below that level, we could see another sharp decline that tests even lower levels. Nobody wants to see that scenario, but it's absolutely on the table, given how fragile sentiment is right now. For the bulls, the real test will be reclaiming 7.5 cents. Taking back that level would signal genuine strength and could mark the beginning of a proper recovery. But that's going to take time, especially with sentiment across the entire market still shaken from the tariff shock. Macro fear doesn't just disappear overnight. It lingers. It makes traders second-guess every move, and it keeps volatility elevated. My advice: watch those key levels like a hawk. If you're trading this, use tight stops and don't over-leverage. If you're investing long-term, these crashes are historically great accumulation opportunities, but only if you've got the stomach to handle more downside, because, let's be honest, nobody knows if we've seen the bottom yet. Here's my final take. Kaspa remains one of the stronger Layer 1 projects out there. The fundamentals are solid. The ecosystem is growing. Zealous Swap is thriving. But even the best fundamentals can't escape macro events like tariff wars and global market panic. The past few days have been a harsh reminder that crypto remains highly sensitive to global headlines and over-leveraged markets. If you found this analysis helpful, make sure you check out my other videos. Drop a comment below and let me know, are you buying this Kaspa dip or are you waiting for more confirmation? I read every single comment and I love hearing your perspectives. And hey, before you go, hit that subscribe button and turn on notifications so you never miss an update. The market's moving fast and you need to stay informed. I'll see you in the next one. Stay safe out there. Quick reminder. Nothing in this video is financial advice. Crypto is extremely risky and you should never invest more than you can afford to lose. Always do your own research, understand the risks, and make decisions based on your own financial situation. I'm just here to provide analysis and perspective. Trade smart, manage your risk, and never let emotions drive your decisions. All right, that's it from me. Peace.